Today we're going to do methods of inventory valuation, how we value our inventory. We've been coming along with the topics talking about what cost objects are, how do you allocate your cost. I think last week we were even talking about your raw material, your labor, your manufacturing overheads. We spoke about how do you end up allocating your overheads to your inventory. Today, we're just going to talk about how do you value your inventory? Like, what are the assumptions that you need to have in mind when it comes to the actual inventory holding when it moves from one place to another? How do you do it? And also consider some of the journal entries that you need to think about. So, the two methods that we value our inventory through, it's the first in, first out method and also the weighted average method. These are the two that we need to look at, and they do build up, because when we come to our next chapter for this one, when we talk about presenting our inventory on the income statement, you have to look at how does the company, what's the company's policy when it comes to valuating their inventory. That's when it comes to play. It also comes to play when you go a bit further along, when we look at process costing, that by the time you do your process costing, when you're costing your things there, you also have to, the valuation method has an impact on your inventory. On your calculations, right? So you will see it presents itself also. It's just that when you have it as a topic on its own, you might think, you don't underestimate it, because the principles, what I'm trying to say is that they carry along, they go along with the chapters, and you will see it feature itself some way. So rather have the principles and understand them, so that by the time you get it. So first in, first out, we look at the categories of an inventory when we are looking at FIFO or FIFO, it depends how you pronounce it. But underneath those inventory categories, there's your raw materials, there's consumables, there's work in progress, and there's finished goods, right? So these are the categories to an inventory. Inventory starts off under categories, there's raw materials. We're going to look at what those raw materials are. As you can see, they've been featuring in terms of what is a raw material, but let's continue. You'll see again that definition. So there's raw materials, then they become consumables, then there's work in progress, then it becomes the final product that we see. I always use the desk at the end. It's the product that we see, right? So that will be the finished product. And then first in, first out comes here when you have to value these things. Okay, so you need to know which categories are you dealing with and how do you value them. And speaking of what we're talking about now, inventory valuation is a process of assigning cost to your inventory to know how much does it cost for you to produce this inventory, what you are going to sell. And according to accounting, they saying that it has to be made in accordance to, you have to value your inventory in order to calculate and record it. And as I was saying, that the first in, first out method also indicates itself by the time that you need to do your income statements, right? Because that's where you're going to show how much did it cost you, did you make any money. So it's very critical because it shows itself there. All right. In your records, it shows how did you value this inventory that you're about to sell. So okay, before I get to the examples, so as I was mentioning, some definitions are here. One of the definitions of the categories of an inventory, it's a raw material. Raw materials inventory that are used in the manufacturing process, as we know, and they are natural, unprocessed. If you think about food, they'll say it's organic food, but it's unprocessed, natural state that still needs to go through the refining process. And that refining process is where we start looking at labor and does it go through a machine, overheads, all those costs that we know about. So raw material, as it says that it's raw, it's natural, it's unprocessed, not refined, but has to go through that process of being refined to a point where you're saying that it's a final product. Some people, when you're looking at businesses, they might be selling raw materials. It's just that you now need to think about packaging, you need to think about how do you present your product at the end of the day, right? So there might be those additional costs that comes to what you're selling. But most things, they go through that refinery product where people are employed to refine this thing to turn it into something that people would buy. All right, I hope that makes sense. Consumables, excuse me, consumables, these are smaller items kept in the store that are used by all departments, okay? Used by manufacturing, support, and admin. Consumables are items which are consumed. They can be destroyed, wasted, or spent, okay? So examples of these are stationery. If you think about stationery, most people use stationery, whether in manufacturing, support, or admin. Refreshments, normally you will always see refreshments, either it's meetings or any form of gathering, there'll be refreshment. Those are consumables. Light bulbs, they come and they go. We consume them, right? Oil filters. So those are the examples of consumables. They can be destroyed, wasted, or spent. So knowing the definition helps you that by the time that you get to the questions, you can identify what is a consumables. They'll just put light bulbs and give you context in terms of how are they used. Then you will know that this is a consumables, right? And it forms part of your inventory. And then there's work in progress, process. Work in process, it's partially completed product. You can't classify it as a finished product as yet, but it's heading there. All right. It also will show itself when we're doing process costing. You will see consumables. Not consumables, work in process, because it's partly completed. And this when you're looking at your process costing, you will see that's when we start identifying, did we have any normal losses or were there any abnormal losses? Because sometimes during the process, you find that maybe the machine breaks down and then it destroys the process that you've made so far with your product, right? It's not yet complete. So what are the implications before you get to a completed product, if you're making sense? So that's work in progress. It's partly completed, but it's on its way to become a finished product. And a finished product, as you all know, it's what's on the factory floor. It's what's in the finished goods store. It's the car. It's the car that you go buy. It's the phone in the store. So when you, as a buyer, as a customer, what you see there, it's a completed product and it's not a work in process, So I hope you understand. There's raw materials, there's consumables, work in process, and finished products, okay? So coming back so after we understand the categories of our inventories and the examples that I've mentioned, you then ask yourself, how do I value this inventory? Because they fall under inventory categories. So they are inventory. So how do I value them? I'm just going to talk about the steps, and then we're going to do question 2. And just like every other week, I'm going to let you guys do question 2, and then we discuss it after you guys have done it. It's going to take some time, so please do bear and just do it right. Even though you might say, it's just first in, first out. I just want you to get it right so that you know the principle and you've learned it forever. So first in, first out method is an accounting assumption that materials that you've received or purchased first are the ones that you issue first. So what do they mean by this? If you bought a certain material to make jackets, the first material that you purchased or that you have received, that's the first one that you need to make sure that you issue in terms of producing. All right. So you have to use what's been purchased first. That was received first. That's very key in terms of the first in, first out method. We assume that the units are issued in the order that's been received, as I've mentioned. First material that you receive, that's the first one that you issue, and that's the order. So the next to first. Then once you have used up that first material, then you can use the others. The oldest unit is the first one, then the units received from the next batch, that's the ones that follow. I hope that's clear. So let's go to, what's this? Question 2. I just want us to do question 2 of, that's in the module. Let's look at question 2. All right, cool. So question 2 says that an extract from the records of Mtente Limited shows the following data about the raw material with inventory code DKH123. Okay. It gives you the date, it gives you the transaction and the details. So they show you that on the 1st of October, opening inventory that you have is 50 units at 630. Then you made purchases of 1,000 at a different price, and then you issued 1,000 units, and then you made another purchase of 500 units, and then there was free costs that were paid, and then you returned some goods, and then you issued some, and then you returned others to a supplier. So it's a typical movement of an inventory that there's there's others that are coming from the previous cycle, and then cycle of production. Then you made some purchases, you issued some, you returned others, so it's a typical movement of inventory. So now, given the context that this inventory, which in terms of its category is a raw material, how do I calculate, which is the required here? They ask you calculate the total cost of material issued so far during the month using the first in, first out method of inventory. And then thereafter, give us the journal for the returns that you made here. You returned 10 bought units. So guys, Angel and Marika, can you please start with the question? I know it's a small one in terms of, but as I've mentioned, I want you guys to understand the principle. So I'll give you guys, I think, 15 minutes to do it. Please do it correctly, do it right, get the principles so that we can, then I know that you know the first in, first out method. Are you okay? So 15 minutes, I'm going to start counting, and then you can start. Maybe let's say 20. I think because you have to do your columns and end. However, just like every single week, if you are done, please put it in the chat so that we can start discussing. But I'll give you guys around 15 to 20 minutes. to do both A and B. Thank you. When we do, because we do have in our timetable revision day, that's the day when we do past papers. That's when you will start doing and practicing your exam technique, right? But then for now, with the questions that we're doing, is that after teaching a principle, just want to see your thinking process. How do you think? How would you approach the question? And then exam technique will come later. Because as you see, there's no mark allocations. I'm the one just saying that this probably will take you 20 minutes to do, right? But anyway, Angel, please do take us through the thinking, your thought process.
Okay, so the first one there on the 1st of October, it said we had an opening balance of 50 units at 630, which gives us the value of 315. And then on the 3rd, we purchased 1,000 units at 5 Rand 25. And then that gave us an amount of 5250.
Yeah.
So all in all, now it means we've got that 50 units at that price of 6 Rand 30 and the 1,000 at the price of 5 Rand 25. And then on the 5th, we issued 1,000 units. 1,000 units. Sorry, it's 1,000 units at 5 Rand 25. Oh, sorry. So on the 5th, we issued. Wait. Think I'm lost here.
Yeah. It says on the 5th we issued.
We issued 1,000. Okay. So we took
the 50. Say the price.
Yes. Yeah. So we took the 50, which from the opening balance, because that was the one that was in first. So it's 50 times 6 Rand 30, which we got an amount of 315, and then the 950 we issued it at the price of 5 Rand 25 from the one for purchases.
Yeah.
So then we were left with 50, which is at the amount of 5 Rand 25.
Correct.
Okay, and then on the 6th, we purchased 500 at an amount of 5 Rand 40. And then that gave us, wait. Oh, okay. So on this one, it says there's a freight cost paid. So there, I went and calculated the new purchase price because of that 50 Rand. So what I did, I said 500 times 5 Rand 50, which gave me 2.7. And then I added the 50 Rand, and then I divided that by the number of units. So I got an amount of 5 Rand 50.
Okay. And remember, maybe just a part of the reason why we add those freight costs, because remember, when it comes to the inventory cost, what we were speaking of, I think, was it last week, that it's all cost, right? So all cost that got this raw material to the position and current place that it's in. So yeah, I'm happy with you adding it. Cool.
Okay. So then I said 500 times 5 Rand 50, which gave me an amount of 2,750. So altogether now we are left with the 50 at the cost of 5 Rand 25 and the 500 at the cost of 5 Rand 50.
Comfortable.
And then on the 7th, we returned to the store the 20 units which were issued on the 5th. So here I said 20, and then the 5th 20. So I took the latest price, which was the 5 Rand 25.
Yeah.
And then I got a value of 105, and then it added to the 50. So now it was 70 at the cost of 5 Rand 25, and then 500 at the cost of R5.50. That's what we have. So on the 8th, it said we issued 400. So from the 400, obviously, we're going to start by taking out the 70 with the cost of R2.50, and then the 330 with the cost of R5.50. And then we are left with a balance of 170 units at the cost of R5.50, which give us an amount of 935. And then on the 9th, it said we returned to the supplier 10 units. So I said 10 by an amount of, so this was the ones from the 6th, right? So I used the original price of the 6th.
Okay. This one.
But I think, I don't know, I think I got it wrong.
Tell me what you did. Before you say.
Okay, wait, let me see here.
So we returned 10 units of the ones that were purchased on the 6th.
On the 6th, yes. So on the 6th, we calculated again. We calculated the new cost.
Which is the 550.
So, yes. So, yeah.
Okay.
That's what I thought.
Did you have this? Thank you. Did you have this in a table format?
Yes.
Okay. Yeah, I think having it, thank you, Angel. Having it in the table format makes it cleaner, makes it easier for you to be able to follow the dates. Because as you can imagine, it's a bit, you can get a bit lost if you just write it informally. So just having it in a presentation mode like this, saying your date, under your receipts, what's your quantity, your price, your amount, and issued, what are you issuing, what are you returning, and then your balance in terms of after everything, the movement. These are the balances that I have. This is the price and amount. It helps. You will also see it with weighted average, that having a table format helps you so much in terms of having a process that even if it's a thing that by the last moment you don't know what's what, but at least you'll be able to get the marks. The only thing is that if they ask a question like this in a multiple question, because I know that the topics that we've covered so far, most of them you find them in the multiple question format. You will need to, because it's the basis of what we are building up to. Because questions like standard costing and direct absorption and process costing and all of those, which are big topics, they make the chunk of the big ones. But then these small ones, the small principles that I say that make sure that you learn and you know them by head, they ask them in multiple question format. So you would need to learn to do it quickly, so that you can answer the question at the end of the day. I hope I'm making sense. So yeah, I'm happy with your process and how you also tabled it, because it makes it easier for you to follow and know and identify cost, like the freight cost, to say that at the end of the day, the cost, it needs to be all cost that brings my product, I mean my raw material or my inventory to a position where it is. So you have to add. And when you return, you also have to take into account that cost. So yeah, thanks, Angel. And then Marika, B.
Sorry, just before you pass there.
Yeah.
Okay, so on the last one, okay, now I had 10 issued at R5.50. So I see there on the table you said R5.40 and the 10 cent. Can you just
R5.50.
So do I have to separate it like that, or I can just say R5.50?
You don't
okay.
have.
Okay. All right then.
Thank you. Marika?
Yo.
B.
Okay, B. It is I debited accounts payable with 54, and I debited the R1 freight for to sundry expense to the income statement. It's R1, and then I said credit inventory of 55, but I see in the text we are on the study guide they say that it's raw material. So my question there is, am I going to be penalized if I say in the exam inventory, or must I specifically say raw materials control account?
I think you won't be penalized per se. It's just that be aware of an instance whereby, you remember I said that under inventory there's different categories. There's
Okay.
raw materials, there's consumables, there's WIP, right? And there's finished goods. So in this instance, you won't be penalized because we're only dealing with raw materials. However, next time, know that if the question does present itself with all those categories that I was talking about, you need to be specific in terms of which control account are you crediting, right?
Okay.
But you won't be in this instance because there was only one category. But if there's WIP, consumables, and finished goods and raw material, so you need to be specific that you are, yeah, you are dealing with raw materials or with WIP or what, because so that someone can be able to see the flow.
Okay, no, sure. Thanks.
Yeah, because the raw material itself is going to end up going to WIP and then ends up in finished. So we need to see the flow. Yeah, but in this instance, you won't be penalized. But in future, look at the categories that you're dealing with. Okay. I hope that answers your question. Angel, are you comfortable with this journal entry? Because I think them separating it here was to help you do the sundry expense.
Okay, yeah, that's what I needed to confirm. So in the case whereby we didn't have like that extra cost where we calculate the price, it was just gonna be accounts payables and then we credit the raw material.
Yes. It's just that in this instance you had this. So I'm saying that in this table, yes, 550 not a problem. But then when it comes to the journal entry, you'd had to specify and just show it as R1.
Okay.
555, the R1. This one, yeah, it's this R1. So yeah, it was more for that, so that you can see it, the return. Comfortable. I'm happy with your thinking process, guys. I understand why this week, but anyway, that's just me. So yes, thank you for that one. I think it's much clearer in terms of first in, first out, what it means. And what you have to note is that the flow of materials does not indicate the flow of cost, right? The flow of materials is the order in which the materials are issued for the use of the factory, while the flow of the cost is the order in which the unit costs are assigned to the material issued, right? So what it means is that the flow of material we just look at, as I was saying, that table helps you to see the flow of the material. What was received, what was issued, and what do we have on hand. So it helps you see what's being issued for the use of the factory. While as the flow of the cost, it's the order in which that unit was assigned for the material. So that's when FIFO comes into play. First in, first out, to help you to give you that cost for the time that you issue out. That's when now you look at the factor that which material came in first, which we have to use up that material first, then that's the cost that we go out with. And then in the inventory ledger, returns to suppliers are treated as a negative purchased, whereas returns from the factory are handled as a negative issue. With regards to returns from the factory, it is assumed that the last issues would be returned first, thus keeping the purchase date for aging purposes. So there's a difference between materials that you issue to, there's a difference between returns from the supplier and then there's also returns from the factory. Factory is still within our control, so that's why you have to look at the dates. When was it last purchased, so that you know how to treat it, because it's an internal thing. But then with suppliers, it's an external thing, so it's just a negative. You're taking it out of your premises, if it makes sense. Yeah, so that's first in, first out. Okay, you will get this just in your study guide, but it's just something that makes sense of what you're doing and makes sense of the method. All right, so the next one, it's weighted average.
Sorry, I have one question quickly.
Yes.
In connection with the FIFO method, if you can go back one slide.
Okay, let me try.
Oh, sorry.
Not a problem. Yes, yeah.
It's the one where.
Is it this one?
When has been quoted as the FIFO and then the 3 points on the. Oh, yes, that one. Number 2, I always get confused with. In the middle of that paragraph, it says, with regard to the returns from the factory, it is assumed that the last issues would be returned first, thus keeping the purchase date for aging purposes.
Yeah.
Now, if you go to that question,
yeah,
on the 5th, we issued 2 separate prices of units. It is the 50 and then the 950 at 2 different.
Yeah.
Yes, at 2 prices, at 2 different prices. So now when you returned the 20, I, for instance, used the 630, but it must be the R5.25. Am I looking at it correctly?
Remember, yes, they said yes. Remember, they said that it is assumed that the lost issues would be returned first, thus keeping the purchase date for aging issues. So the last purchase that you did was the one for R5.25. This R6.30 was just coming from the previous. It was an opening inventory. It was not your purchase. It was the previous cycle.
Okay. So because the fact that it is first in, first out, it is the 50 that must go first because they are now first to go out.
Yeah.
Then second, it is the 950.
Yes.
So when you turn, it's just working it backwards up until how you first in, first out.
Yes, and if you look at it also, Marika, is that what's this? This 50 was already used up. It was already done and out.
Okay, cool. Got it.
It was already, what I'm saying is that it was already issued.
Yes, yeah. Okay,
it's out of the process.
Yes.
And we're using also the last purchase date.
Yes.
Yeah.
Okay, no, cool. I got it. Thank you very much.
Yes,
sorry.
I know where the whole thing of just getting clarity. But yeah, so just be aware of that. All right, cool. So weighted average, right? So with the weighted average, we look at, it also has the same principle in terms of categories. We're working with raw materials, consumables, work in progress, work in process, and finished goods. And this is the method. Weighted average makes no assumptions about the flow of materials. Yeah? The issuing of materials at a weighted average cost assumes that each batch taken from the storeroom is made up of the same quantities from each consignment at the date of issue. So we're just averaging everything up. It doesn't care what's going on. They just average. They just make sure, they just make an assumption that each batch is coming from the same consignment, all right, from the date of issue. No attempt is made to identify when were these units actually purchased, all right. So they don't keep, they don't take note of the purchase date. I just make an assumption and, oh, okay, when last was this one issued? Let's just aggregate and average them out, and then this is the cost that we have. All right. No, before we get there, so we'll take the notes later. I wanted us to look at this question. It's also going to take you guys some time. Let's do question. I just want to see B. What does B want you guys from you guys? Might have to do A, B. This one shows you the difference between the two. Okay, let's use the same information from question 1 in the previous assessment. So, man. All right, no, sorry guys. Let's do question 3. Let's do question 3. It's gonna take you guys a while, but it will reinforce what we've learned. All right, so it's a combination of, it's just that I didn't want us to prioritize B, because I don't want you guys to spend more time on A and the next thing. Nah? So let's do, do I want us to do this? Sorry guys, I'm just deciding. Let's go to the very same question. If you've got time, we'll do question 3. Let's do the very same question, but apply weighted average. Is that fine? Or do you guys want the new challenge? If you guys agree with me, okay, let's do question 3 because it has a bit of enough info a bit. Let's do question 3, but please do B, prioritize B. All right, prioritize B and then do A. Is that fine? If we all agree. So you're starting with B and then you'll do A. Okay. So let's look at question 3. The following transactions took place in a manufacturing company during the month of September for materials item number 555. So they give you the opening inventory. They give you what's been purchased during the month of September, what's being issued to production, what's been purchased again, what they issued to production, another issuance, and then they returned from production, and then they received an invoice with freight charges, and then they returned to the supplier, and then auditors made a surprise inventory count, right? So B says that if weighted average method of inventory valuation was used, at what unit cost would the issue on the 11th would have been made? So this one, the price, the unit cost that this issue would have been made. What's that cost? Yeah, let's do B. All right, so because it's just how many transaction dates are we working with? 2, 4, 5. I'll give you guys 10 to 15 minutes and then we discuss. And then we'll then do A. Yeah, I think let's break it down like that because I don't want us to focus too much on first in, first out. So let's do question 3.
Okay, sorry, just for clarity, must we do it up until only the 11th as per the question, or must we go right through to the 25th?
Until the 11th, please.
Okay, cool.
Yeah, 15 minutes. Let's do that one. Then we should be, then we'll discuss. Marika, you can then take us through, if you don't mind, what you did.
Okie doke. First of all, I used 2 decimals, and I see in the study guide afterwards that they used 3. So my answers are a little bit higher than what the study guide is.
Okay. Okay.
Okay, so I did the tables again. The first of the 9th, I have an opening balance in my total columns of 1,000 units at 7 Rand per unit. On the 5th of the 9th, I received 2,500 at 7.05, which means because of the fact that I received it, there's a new weighted average that has to be calculated.
Yeah.
The total of the 2,500 and the total of the 1,000 units, what I came to hold on, do you want me to give you the amounts again?
No, no.
Just the mentor, just the way I thought, okay, new average, I got a new average. I'll give you just the cost. I came to a new cost, average cost of 7 Rand and 4 cents, 704. And the units is 3,500.
Okay.
So then on the 7th of the 9th, I issued to production 600 units, but that means that there is no new weighted average that must be calculated because I'm only issuing to production.
Correct.
So the cost stays at my weighted average of 704. Then on the 10th of the 9th, I received a new batch of units of 1,400, which means there's a new weighted average that must be calculated. I got to 708, 7 Rand and 8 cents, and the total units is 4,300. On the 11th of the 9th, I issued to production 500 again, which means no new weighted average. It remains the same as the previous one, which is 708.
I'm comfortable. I am comfortable even with your thought process to say that whenever there's something that we received, now we need to get an average price of our units, and then whenever there's something issued, we don't have to do a new weighted average. We use the one that we just calculate. So I like that. Thank you. You did well. I think with them using 3 decimal is just so that you don't, but they must indicate, I think, in the question to say round it off to the nearest or with 2 decimals. You get what I mean? So is it safe to do 3 decimals? Maybe it is just for safety, because I just want to see if it's a trend with the previous maybe questions that they have here. It seems like instead of rounding it up, I think they use the 3 decimals when it comes to here. You see, when it's a point where now you have to make your 7 and 8, if you get what I mean. If you have to round it to the nearest, that's when they use the 3 decimals. So I'd say use the 3 decimals just for safety, because I'm just looking at what they use just to be safe. But the principles, it makes sense.
Yeah, because I see that in the study guide on page 145, right on top where it says note number 2, it says that when you recalculate the new weighted average, there is going to be a small difference due to rounding. So I hope I will change.
I think they must indicate. I think they must indicate is it 2 decimals or is it 3?
I will focus on that specifically for the exam, but
yeah, cool.
Thanks.
Thank you. Angel, so where were you confused?
No, I think I actually got it right. I was just doubting. So yeah, that's
let's get it.
No, like I don't know. But obviously I started doubting where I had to calculate the new price. I know normally when you receive the stock, when you have to issue, you need to calculate the price, whereby you will say the total amount of the ones that you got, divide by the total units, and then you will get the new price which you're going to use to issue.
Yeah.
So yeah, so when I compare, it's actually the same except for the rounding offs, because I did 2 decimals as well.
Okay. Yeah. So I'm comfortable. So I think now, because you've done it, next time when you do it, you won't feel that amount of doubt to think, am I on the right course or am I not, or what am I? Yes. So it's just in bed, like I'm saying, guys. As much as it might be a small topic or a bit, we're just doing FIFO and weighted average, it comes up in process costing. And by the time that we get to process costing or absorption and whatever that they want us to do with those big topics, you don't want to now go back and say, how do I, that table, how do I do the weighted average method? How do I do the first in first? It needs to be second nature where you do it quickly because that's what they expect. So I'm hoping that you embed these principles, that we are just slowly getting into them, but then by the time we do big topics, we can't be revisiting this. Do you get what I mean? All right. Any questions before we look at another question? I just want us to, okay, yeah, now we can do A. Before we do A, because A is, before we do, let's look at what they say we must note in terms of summary. Once we do, then we do A, then we should be done. With weighted average, we spoke about dividing and to get the average price. After an issue to production, there should not be any change in the cost price, as Marika was saying, because the units are issued at that average price. However, there should be that's the point that you mentioned. There should be a small difference due to rounding. And then, however, if every receipt or purchase returned to the supplier, as well as those returned from the factory, the new average weighted average price should be determined. So like how you guys were thinking, I like that, to say with every receipt that we do, we now need to calculate a new average. So I think weighted average is a bit straightforward. All of them are. Let's do A. Let's do A. Let's just close it with A. A says that if the company uses the first in, first out method of the inventory valuation, what is the value of the item? Remember, we are doing 555, which the auditors would have found, because you remember they came on the 25th of September to do a surprise inventory count. So what is the value of the item that they would have received, or found on that date? See the tables quickly, first in, first out. Let's find out what's that value. Okay, and then we are done.
Okay, so we had an opening of 1,000 at 7 rand, which gave us a value of 7,000. And then on the 5th, we purchased 2.5 at 7 rand 5 cents, which gave us a value of 17,625. On the 7th, we issued 600. So that 600, we take it from the 1,000, which was the opening at 7 rand. And then the cost gave us 4,200. So we are left with 400 from the 1 year 7 rand, which is our opening, and also the 2.5, which is our purchases at 7 rand 05. And then on the 10th, we received 1.4 at 7 rand 15 cent. That gave us a value of 10,010 rand. And then so altogether now we are left with the one with 400 at the value of 7 rand, 2.5 at the value of 705, and 1.4 at the value of 7 rand 15. even if I don't say the total, it's fine.
Yeah, it's fine.
Okay, and then on the 11th, 11th, just hold on a sec for me. So we issued to production 500. So that 500, we took 400 from the remaining year opening balance year 400. So it's 400 times 7 rand, which is 2.8. And then we took the 100 from the one from purchases, which is the cost of 7 rand 5 cents.
Yeah.
And then it gave us 705 rand.
Yeah.
So altogether now we are left with 2.4
Yes.
at the cost of 7 rand 5, and then the 1.4 at the cost of 7 rand 15. And then we also issued 2.4 units on the 18th. So the 2.4, we took it, obviously we took the one that was remaining at 7 rand 5, and then it gave us 16,920. So now we are only left with 1.4 at a cost of 7 rand 15.
Yeah.
And then on the 17th, we returned to production 100 units. So it was 100. So it's the ones that we issued on the 7th of September, right? So the ones we issued on the 7th of September, we issued them at a cost of 7 rand.
Yeah.
So I said 100 rand times 7 rand, which is 700. So because the returns value, they're adding up, so we're gonna say we are left now with the 1.4 at a cost of 7 rand 15, and the 100 rand, and the 100 units from at the cost of 7 rand, which is 700.
Okay.
So on the 21st, we received an invoice of 400 units for 3.2 at the freight charges of 80 rand. So here I said 3.2 plus 80 rand divided by the 400 units, which gave me a cost of 8 rand 20.
Sure.
So I said 400 times 8 rand 20, which gave us the total of 3,280. So altogether now we are left with the 100 from the 7 rand and the 400, 820.
Yes.
And the yes, I think those are the two. Wait. I'm on what, on the 21st? Yes. And then on the 22nd, we return to the supplier 200 units.
Yeah.
So the one for returns here, 200 units, which it's from the ones of the 10th, which was issued at the 10th, on the 9th actually, sorry.
On the
10th.
September,
Yes,
yeah.
on the 10th. So the 10th, the purchase price was 7 rand 15. So I said here the 200 times the price, 7 rand 15, and it gave us 1,430. So altogether now we are left with 100 units times 7 rand, and then 1.2 units. The 1.2 it's 1.4 minus the 200.
Yes.
At the cost of 7 rand 15, and then 400 units, which is the 121 at the cost of 8 rand 20. So our total would get 12,560, which is 1,700 units.
Comfortable. First in, first out is not, it's straightforward, right? It's not that complicated, and I'm happy with the thinking process. And Marika, I hope you also comfortable with the answers, right? Any questions? Well, she said she'll be back in 2 minutes.
Oh, I am fine now. I was back a while ago.
Okay.
It's cool. Thanks.
Yes. So both methods, the more you are comfortable with them, then you move on to the next, right? Because with weighted average, you know when you need to do the weighting of the cost, and then with the first in, first out is to know from which material are you pulling from. It's normally the first one that came in. You need to use up that one, and then you go to the next batch. So that's literally first in, first out, and weighted average. So with the last, so that's the topic for today. With the last minute that we have, I just wanted to ask you guys, because I just want to have an understanding as to when do you guys know when are you writing your exams? And because I'm sure that you've already covered these topics. So far, which topics are you guys struggling with so that I can know what we should spend our time on? So the floor is yours, guys. When are the exams, and then the exam dates if you know, and then also which topics, because I am well aware that probably this is a revision for you guys because you already done your assignment one. Which topics are you struggling with or are you scared of so far, so that I know where we should focus, you know?
Yes.
Yeah.
The date is not yet out, if I'm not mistaken, because it's not showing anything on the timetable.
Okay. Cool.
And then from my side, it's most of the questions which were on assignment 2, like most of the topics in assignment 2, I think those are the ones that I just need more to
What
pay
are
more
those
attention
topics?
on.
What are those topics?
So let me just check. There was the ABC thingy.
Okay.
ABC, and then what else? I must just check.
Okay.
Mariki can proceed while I'm checking.
Okay, Marika.
Okay, cool. Thanks. If I can be honest, because of the fact that MAC is such an intense subject, specifically this for this semester subject. I am happy to go topic per topic going forward still, because there is another lecture that we have also during the weekend, but it's high flying, and it is quite intense. So when I sit with yours as well, it kind of the more I hear it, the best it sinks in. Where other stuff or other things I would have perhaps missed studying through or listening to the other lecture, it actually just I absolutely I love how you do. You really dive into every topic, and going through the examples and the questions. When you ask us to present, you kind of put us on the spot. So I like that. It just amplifies what I battle with as a MAC student.
Yeah.
So I would prefer if we still keep on going from topic to the next topic flow type of thing.
Okay, cool. Then I'm comfortable with that. Thank you. Because I was just worried that, sometimes it finds that it's like a revision, is like, these topics, But I know that it normally catches, with my experience, it catches a lot of my students when we start tackling the big topics. The things that they struggle with is these small ones where I'm just like, you should know weighted average by now. You should know how to treat it. And then we have to go back rather than just moving forward. So I'll just continue with that. And then, Angel, did you find the topics? So thanks, Marika, for the feedback. I appreciate it. I'll continue with what you're saying. I think like you're saying that it just hopefully just embed the principles, because with MANEC, how I approach it, like I'm saying, it's like maths. The more you do it, the more you get better at it. So don't, and any question is not a wasteful question. It helps you embed the principle that you need to learn. Because the exam time, it's more like war. You just have to use the tools that you have in order to make it. It's not a point where now you need to learn how to answer. No, with exams, you need to know your story and know when to apply your stories, you know. So, okay, cool. Angel?
Okay, I think actually it's from, I'm just taking here with the flow of topics from the textbook. So I think we can just carry on the way you are doing, because it's actually the next topics which I'm more worried about. So
Yeah,
as we do them,
these-
obviously,
yeah,
yes,
yeah.
yeah. So
We done.
I
Yeah.
mm, I think maybe if possible, to, I don't know if we only have like 2 hours, or is it possible to extend time with 30 minutes or an hour? I don't know.
So I'm
Just that.
doing
Mm,
auditing also now.
is
So
it?
yeah, but the 2 hours I will try to speed up the theory and then focus on the questions.
Okay. Which
Yeah,
auditing are you doing?
it's auditing 2602.
Oh,
Yeah,
okay.
it's that one. Because I'm just gonna have a break and then I do auditing. So the next topics that we're gonna do is because we're closing now, we're going to do the variable, direct, and traditional method. And then thereafter, as we go along, this when the ABC will come, job costing, then process costing, joint and buy. These ones are normally, you can lump them into one. The ones that I know that will make us spend a bit of time on, it's standard costing and relevant costing. Sorry, these are the ones that I like spending a bit of time on because it just tests how you think and how exam technique is very key there. But yeah, I think we are almost there, guys. We are almost there. So with this one, I'll try look at past papers because it's easier when you do so. So don't be surprised when next week when we do our class, it will be more on the questions so that we can see different ways that they ask this. But I'll try also do the slides, cover the theory, but then with this one, I like doing past papers on because it just helps you see different ways that they can ask this absorption costing and direct costing thing uh, question. I mean, topic rather. All right.